Hey traders, Nick Shaheen here looking at Lyft. Today they reported earnings after hours on May 7th. Bad day for the market. This is the day where we fell quite a bit, 2%-ish, give or take, depends on what index you look at. And we're still in a tizzy from a macro geopolitical headline from the White House saying that Thursday night, midnight, so plus 1 minute, which is Friday morning technically, we will have new tariffs coming in. So the market had a tizzy on Monday, but we quickly shrugged it off. It was kind of a weird way. And then today we revisited the lows, the overnight lows of Sunday, which we should have done yesterday on Monday. Anyway, so today is Tuesday, and after hours, Lyft has the unfortunate, boy, talk about being set up wrong for it. There's the Uber IPO coming, and there's the market sell-off, and all the skepticism going into the earnings is just basically gravy. So what now? After hours, it sold off 3%, it ran 3%, thereabouts, so they're kind of confused as to what to do with it. And so here's my take on it. This is my 2 cents. I'm not an expert in the field. All I know is that these two companies, Lyft and Uber, are trying to grow a segment that they invented. Basically, they didn't invent it. There were taxis before. They just found a better way of doing things. To me, there are a lot of pitfalls, but they're handling them one at a time, and you can't deny the growth that they're delivering. So the report itself from Lyft was not bad. And so there's no reason to sell it based on the report. We all know they spend a lot. We all know they grow a lot. And they came in line with the expectations as far as guidance and the metrics. So there was no, oh my gosh, there might be good news from how they're partnering up in the future and the potential of them getting driverless cars to help grow without having the human element in there, which is probably the exciting part. But to me, that's still years and years and years away. They might be able to do it in segments. I think Phoenix or Arizona area has one, but they have a long way to go to make it system-wide. The good thing about Lyft, it's US-based centric, basically, versus Uber, which is a blanket on the world, and other things like Uber Eats, etc. So back to Lyft. The earnings report itself was not scary, so it shouldn't sell off big time. So from here, it goes to two segments: who's investing and who's trading. And within the investment part, there are several ways of doing this. Some people want it for the long term. Those are either already investors from the private sector, and or those who jumped in over here or along the way here. So those two segments don't really need to worry about it because they're in it for the long term. So if I'm in it for the long term, I'm not going to worry about it. It'll either pan out in the long term or not. This is like Amazon and Tesla. Everybody doubted them. Well, Tesla is still a question mark, but Amazon is not. So they were trying to establish something new, and there's doubt all over the place, which is fine. I can take it as long as the growth is there. And Lyft did deliver growth. The growth was pretty fantastic. I think they have like 20 million users, which is double last year or thereabouts. So don't quote me on that. Go check it out. But it's a big number and it's growing. So that's all I need. If they're overspending, that's fine. And it seems that their spending is falling or not growing. And they also committed to the spending this is the max spend, which I can't see how that's possible, but that's what they say. So I'll take their word for it for now. So long term doesn't change anything. If I bought it here, or if I own the shares, if I bought calls, I'm in it for the leaps, I'm in it for the long term, I'm good to go. So for those who are looking to trade it, is this a time to buy? So if you fall into the belief that long term this will work out, then same reason why you would hold it if you're already long it. Yes, it's time to buy. Don't try to snipe an entry. Now there is the caveat of markets being at all-time highs. That's a risk. But that's always a risk. So here we are looking at short-term candles. Okay, this is a 60-minute. Every candle is 1 hour. So there are lines to pay attention for those who want to trade it for the short term. Holding above 58 is important right here. Let me see if I can mark it up. Where's my pad? All right, here we go. Whoops. There's the pad. All right, so holding above this line is important just because it has been support. So if it was support, it needs to continue to be support. Otherwise, it becomes a neckline that will cause a sell-off. And the sell-off wouldn't be that disastrous. This is, I believe, the recent poke low. That would be the kind of target where we go next. But all of this is support zone. These are, short term. These are hourlies. Okay, we'll expand later if we want to see it. But for the short term, this needs to hold because it is the base for the bounce. And this is where the exciting part comes in. Mini resistance right here, bigger resistance right here, but it's also a catalyst. So this right here, which is $61, probably is the biggest test where it's going to see resistance, because it has shown resistance right there for a while. So Facebook, I don't even use it. So here we go. Resistance. It's likely to be resistance, but there lies the opportunity. If they can do this, then they can use it to expand higher, expand the range higher. So this is a short term. The short term, I'd be looking for 1, to hold 58, 2, to overcome the highs of this week. Well, not the highs of this week, the $60 ledge from this week, and from today, I should say, and then overcome the point of control or point of interest where bulls and bears agree on value, which is going to be resistance on the way up. If you can do that, then you can expand to 64-ish. Oh, whoa, big information here. Okay, so let's go back to 120. Whoops. All right, so now I just doubled the candle. So now every candle is 2 hours. And these are the levels we were looking at. I said 64. So now this level is ledge. So every ledge you see is resistance on the way up. Just because it was a scene of an accident scene on the way down, it's likely to be resistance friction on the way up. And in this case, this is a ledge probably that's most significant. So if I'm long and I'm profitable, I would lighten up or lock anywhere around this zone here. How does that break out? Kind of a, if you look at it, it's a neckline that they're going to attack right here. These are the same levels we were looking at before. This is not a head and shoulders, but the same spirit. The head and shoulders is the bulls attacking a neckline several times and finally overwhelm the bears to shoot higher. Okay, and then I look left and I'll see, okay, this is a big point of contention, so it's likely to be some resistance if they get there. Same reason I can probably make an argument up here. We can zoom out and double check that. So I'm doubling to 240 minutes. Well, in this case, that doesn't have a lot of history. So yeah, this was 70, and all here would be guesswork. So whatever we covered already are the real points of interest. So number 1 job, hold the bottom, the recent bottom. Number 2 job, overcome this ledge, neckline, 63, 62.70. It's not a hard line in the sand, it's a zone. And then if you do break out, I would exit somewhere around here or lock it in. Why? Because this was a zone of a big ledge right here. So you can see it. And that's like 68 to 70. So people who are long will probably book. But if you're in it for the long term, kudos, then you entered at a good time. Maybe you sell some covered calls or something like that. So again, this becomes a matter of time frame. How long do I want to be long lyft? If really long time, it doesn't really matter if you buy it here, if you buy it here or here. It's not going to matter over the long term. They either will succeed or not. If you're trying to snipe a nice entry point, we just laid out the levels that matter. Nick signing out.